Hey, I'm Mindy Kinnis. This is The Daily Rage. This past week, we took a look at the difference between trading the SPY and the ES, or the S&P futures. Let's do the same thing for the NASDAQ. What we're looking at here is the QQQ. This is a 60-minute chart on the left and the daily chart on the right. This is the ETF that tracks the NASDAQ. So you could trade this, or you could trade NASDAQ futures. So let's talk about what the difference would be. On Friday, you can see that the low was 276.16, very, very close to the open, and the high was 281.22. Now let's just say that you had the best entry and exit possible, and you got in at the low, rode it all the way up for the day, and got out at 281.22. That would give you $5.06. So for example's sake, we're going to say you have an account size of $2,000. That means you would be able to afford the intraday initial margin on the futures. So $2,000 either way. With $2,000 and a share price of $280.61, you would be able to purchase 7 shares. So with your 7 shares that went up $5.06, that gives you $35.42. So $35. Hey, that's almost like my first trade. Nothing to sneer at, as I always say, but let's talk about the difference in terms of trading this as a futures contract. So now what we're looking at is the ATNQ, that's the NASDAQ futures. And again, for comparison's sake, and let's make this even more comparable. Last time I was talking about intraday initial margin, but let's say you weren't even trading this thing overnight, which you could if you wanted to, but let's say you got in around the opening of the stock market, which would be your regular intraday initial margin requirements. So you got in down here around 11,400. You rode this up through the day to about 11,600, got out at the end of the day. That right there is a 200-point move. On the NASDAQ futures, on one single contract, which you could afford on a $2,000 account, you would have just made $4,000. So unless you have a whole ton of money that you can buy a lot of shares of stock with, to my mind, it doesn't make sense, just purely based on the math, to be trading stocks instead of futures. If you have a smaller account, like I do, this provides you so much more leverage so that you're able to get some decent profits, as opposed to like, oh, I made $35. And again, there's nothing wrong with $35, but there's so much more potential for you. And trading futures is a really great way for people with a smaller account to be able to make some really great money. I'm going to be doing a webinar on Wednesday. If you want to learn more about this and many of the reasons why I think that futures are totally the way to go, I'm going to bust some myths. I'm going to talk about why they are my favorite thing to trade. I'd love to see you there. I'll link you to the page after this video. I'm Mindy Kinnis. Thanks so much for watching.